Hey everybody, morning. Morning. Philip, Larry, Wade, Everett, Don, Tom, and Pat. That's interesting, Tom and Pat. Sergio, Arturo, Ed, Infinity, Maurizio, Eric, Goose, Lieutenant Colonel, glad to see you. Mark, Donald, Rollin, Craig, Cliff, Al, Anil, Alan, Andreas, Tara, Francois, Rex, glad to see everybody. Keith, Nick, um, Rick, glad to see you. If you want to chat with me like these fine folks, click over here, right over here, and be a subscriber on the channel. And then a few seconds later, you can pop on and talk. All right. And teamed up with Roger. I haven't talked to Roger in a little while. Anyway, Kimberly Moore, good morning. Merle, Robert, Laura, glad to see everybody. And, well, interesting, right? We have these FICO scores. And the average US FICO score has been growing for years. Except just recently, the average US FICO score dropped. Look at this right here. Get my mouse on the right screen. Actually, pop it up. Look, actually dropped for the first time in a decade since back here. This is FICO credit scores, average across all the US. So the average credit score hanging out between 710 and 720. If you're below that, you're below average. If you're above it, you're above average. This is like, this is not like the red warning light on the cockpit, dashboard like I was talking about with the S5 FI. This talks about the 50-day moving average. This talks about the 200-day moving average. That's a big red warning. Like this right here is like a caution. Like this is like a, something's up. And we didn't have this all through last year or even 22 when the market was pulling back. We didn't get it till just recently. So they're up 27 points since October 2013, but we just dipped. So this is indicating that possibly if this isn't just a 1 month, one data point little, if this continues, this could be the indication that U.S. credit borrowers, basically borrowers are distressed and having trouble maintaining their credit, which means they're not paying their bills, which means banks are going to have a problem. Now, March 11th, the emergency Fed lending facility is finito. So we got about 4 more days on that one. So next week, I don't know where the billions of dollars are going to come from to keep banks liquid and solvent. Yesterday, we saw Senate Secretary Mnuchin, financial whatever, backing NYCB, injecting about $1 billion, I guess. We saw that thing get some volatility. Everybody kind of thought that they were going to announce a big problem, and they actually announced financing. But down from $10 down to $3, not awesome. And we spiked down below $2 yesterday. Pre-market $3.49. The banking problem's not done. It's just not. It's a slow-moving freight train of a problem. Started when the Fed started raising rates, and eventually we're going to have a financial crisis on our hands. This is the chart I'm watching right here. This is the crux of it right here. This is the DGS2. This is 2-year Treasury, constant maturity rate, DGS2. And you put on FED, FUNDS. You click this little compare button. And if you're wondering what I'm using is TradingView. It's just tradingview.com. You can click this little compare button right here. Type in FED, FUNDS. You just go like this. FED, FUND. Oh, get my fingers on the right keys. Fed funds right there. Effective Fed funds rate. Add that to the chart. Puts the line on there. And anybody that tells you that the Fed controls the market is completely full of crap. Look at this. They chase this DGS2. They chase it up. They chase it down. They chase it up. This is the way it always is. As long as I've been trading, they chase it down. They chase it up. When they cross over, we get a financial problem. We got a financial problem there. We got a financial problem there. We got a financial problem there. And we're probably going to get one here. The only thing I don't know is, do we get it now or do we get it from up here? Yesterday, Jerome Powell was very hawkish, talking to the House Financial Banking Committee, whatever it was. Very hawkish, saying that they may not cut rates for a couple years. That is not in line with what they've been announcing on the FOMC meeting. Not at all. So, be careful out there is what I got to say. Be careful, be careful. This looks like it may be an intermediate before we actually go to some higher rates and cause bigger problems. All right. How does that all tie together? Well, whenever we find the top, whether it's this year, whether it's next year, it's going to be a problem. And, you know, I was looking at this last night. Let's see. I don't know if you've ever seen this right here. Look at this, U.S. national debt. But that's not the bottom line story. Look down here. You've got unfunded liabilities and stuff like that down here at the bottom. This thing doesn't even fit on my screen. Right there, $213 trillion U.S. unfunded liabilities. This is just usdebtclock.org. If you're wondering about it. It's a bunch of interesting statistics right here. The total U.S. debt, pop it up, $97 trillion. Added on to 213, so we're talking 300 and something $trillion. Just the unfunded liabilities, $213 trillion. That's $634 per person, per citizen. It's not even a taxpayer, that's per citizen. Crazy numbers. If you've never seen this before, right there you go. And whatever you mouse over, it kind of gives you information at the top. This is out of control. Look at this. We are now 123% of our GDP on the debt. There's the debt, 34.4 trillion. There's the GDP, 27.9 trillion. That's basically the output we'd make in a year. That number's bigger than this number. That's insolvency. We can't pay it off. This is growing faster than this. That's a problem. And as Goose and I were talking about, the only tool they have to fix this right now in the current situation is to inflate the debt away. That's counter to the narrative, right? We're going to get inflation down to 2%, blah, blah, blah. The only way to fix this problem right here is mega inflation. That kind of sucks, but that's the long and the short of it. All right, all trading involves a substantial risk of loss. How do we actually use this and trade with it? We're going to talk about it. Past performance, not necessarily indicative of future results. I may never get another one of these things right again. Now, this presentation is intended to be informational, educational, fun, and entertaining. It is not a recommendation to buy or sell anything. Anything at all. Don't buy stuff from me. Don't buy stuff from gurus. Don't buy stuff from financial gurus. Don't buy stuff unless you trust the people you're doing business with. All right. Also, don't trade. Don't buy stocks, don't buy options, don't buy Forex, don't buy futures, don't buy cryptos, don't buy bonds, don't buy treasuries, don't long them, don't short them, don't trade them. It all involves a substantial risk of loss. And if you desire that personal financial advice, well, that's not what I do. You got to hire somebody, make sure you trust them, that has your personal financial interest in mind when they give you financial advice. You got to hire and consult your financial advisor, your own. Now, coming up the rest of, wrong button. That's the bar chart, S5FI. We're looking at Forex Factory. We had Jerome Powell testifying yesterday in front of the House, today in front of the Senate and Senate Banking Committee. And I expect more hawkish talk. It'll be a little bit different, but it'll be a lot of just going down the talking points that he already had as they ask him the questions. So don't expect anything else new, just more hawkish talk. And yesterday we saw some lightning in the market, but ultimately looks like we may actually grind on up to a new high again. It's kind of, we're getting through that resistance at 51.30, pushing on through. That's the orange zone. I said yesterday we rejected off of it, came down here, made a low overnight about 3 in the morning. Now we're busting on through. Looks like we're actually going higher. Right there. That was a 618 retrace, almost to the tick. Launching off. That means highly likely we're going on up here. 51.84 at this point on the futures. Possibly 52.15 above that. Right there's the targets. Right there's the targets. Sometimes it doesn't get any simpler than that. This is why trading the small time frames can be very difficult. This setup looked like it was going to break down, but at this point, it did not. It found support, bounced, coming up, setting and breaking higher than here, setting the odds that were going on up right there and there. Now, this can happen quickly. We could be up there tomorrow, today, tomorrow, this week, and then that could be, and we're getting near the end. This is last little squiggles, as I said before. Last little squiggles, last little squiggles. I mentioned on Monday and Tuesday, I think, that it looked like the ES and NQ could use a couple more little squiggles to finish this baby out. Russell, maybe in the same situation, where it needs a couple little squiggles. Possibly a little bit higher high right up here in this orange box before we roll. Once we roll, it's going to be pretty nasty, I'm pretty sure. Especially with how extended the S&P 500 has gotten off of this low right here. The S5FI continues to cook right here, right in the zone. This was another indication yesterday. We actually had S5FI growing while the S&P was actually kind of declining, churning. That was interesting. The S5TH, stocks above the 200-day, also ramping up a little bit. So, interesting situation across the market here. Interesting. So, oil yesterday got slammed on that hawkish talk from the Fed. Retracing again. I thought we were going to get the breakout. Did not ever make a higher tick. Back in the box. That's trying to break out. It's trying. Hadn't done it yet. May come down, retest the roadmap line one more time right there. If you want the roadmap line, link is in the description down below. Click the more button, expand it down. It's like $5. And you get 3 months of watch list. You get the indicator. You get some instruction videos. You get some training. And you get an offer to add 12 more months to it for like $20. That's probably my best deal going. And you come get in Discord, where I'm going to go hang out after I get off of here. Gold continues to inch higher here. We were kind of ramping. Now we're declining off of that high just a little bit the last hour or so. Thought we were going to break on out. Looks like we're going to retrace just a little bit. And we'll see what happens here. We're having a little bit of trouble getting through that prior high from prior high zone. Yeah, that was. There's the market open, sounds like. Off to the races. Up 30 already. Little bit of trouble. A little bit of trouble pushing on through. It's interesting how it high-ticked right on the orange box I drew. I was like, why did I draw the box right there? Funny how that happens sometimes. So we're looking for gold to push on up. Maybe not today, but this thing could all of a sudden rapidly do a bunch of these big candles. It has been known to go on rapid moves before, and when it explodes higher, it can really move. I mean, look at this one back here. Look at this, some of those big candles right there. Can really move. So don't get caught short gold. Certainly don't get caught short gold. Bitcoin, grinding it out, hanging in there, hanging right below the high we made 2 days ago. Yesterday was a pretty strong day back up, churning a little bit overnight, but hanging right in there. We may pop all-time high. The extension, on the futures, we did make all-time highs. Some brokers, we made all-time highs. 72,900, the next upside target off of this high to this low, the extension, and the main event right here coming up. 6,400 blocks left to go, about 43 days. We'll see where we get to. This is Bitcoin halving countdown. This is where the payout for mining a block, one of these blocks right here, currently they pay 6.25 Bitcoins. It's going to drop to 3.125 Bitcoins plus the transaction fees. So there you go. It's coming. We're in the window for FOMO to kick in. I was speculating that between 30 and 45 days, we would start to see some FOMO picking up. It looks like we started a little early, and we could do something crazy in here, then get a pullback into that halving event. That halving roughly happening right over here. It maybe happen on the 20th, maybe happen on the 21st. Not exactly sure. It's based on the block count, not on a time. That's a difficult concept for some people to absorb, but it's based on the block count, not on time. All right. If you got further questions, I have lots of other information about that, but right now, that's what you got. Ethereum got a little, we tried to pop and met a little bit of resistance, but I still think we're set up. To go tag that 4,000 area right up there. We did a little mini lower time frame pullback. It was very quick. We had busted up here, found a little resistance, but that kind of sets us up to go ramp right up to this 4,000 area and the target above that 42.30. Simple as that sometimes. Dollar. Heading back to the bottom of the box. If we break down below, probably come back down to 99. We get below that low from back last summer. Yeah, last summer. We get below that low. Watch out below. Now, for those of you that think the dollar has to drop for the stock market to rock, look, there's where we were in the summer with the drop. Here's where we are now. S&P at all-time highs. S&P was not at all-time highs. Correlated when it's correlated, but not when it's not. Don't get stuck in mainstream media narratives. All right? Don't trade mainstream media narratives. Go check it out yourself. You can see right there. That's not... The S&P's at an all-time high. The dollar dropping is not what's causing that to rally. That's just not. MSTR on the morning movers list. What are we actually watching? Today we're popping on Bitcoin popping again. Be careful. This is looking a little unstable. I'm not sure what's going to happen here. I mean, we closed here, opened here, dropped to here, reopened here, climbed up to here, popping here. that's a bit of instability there. Now people are like, how much Bitcoin does MSTR mine? They don't mine any. They just buy and hold Bitcoin, and they do dilution of their stock and buy more Bitcoin. It works while it works. It's a good plan while Bitcoin's rising. As long as they can stay solvent when we go through the next crypto winter, they'll be all right. They have not sold out. Like, as far as I know, they have never sold out Bitcoin. They've just been buying. They're even buying here, and Bitcoin's essentially at the all-time highs, and they're still buying more. That's how optimistic they are. Prices are going on up. AVGO. This is that's weird. Popping overnight and dropping. That's a weird candle pattern. Ramp overnight, drop. Ramp overnight, drop. Ramp overnight. I'd be cautious on that one. NVIDIA keeps pushing on out. Constant march toward the 1250 target, where NVIDIA becomes the largest company in the world. This story eerily similar to Cisco in the 1990s. Be careful. Yeah. MSTR, basically mortgaging. They're like quadruple mortgaging their house to buy Bitcoin. That's essentially what they're doing on MSTR. So look at that one. If we get to that point, NVIDIA becomes the largest company in the world. For what? For what? Does it even make sense? Not to me. ASML. These guys supply chip fabs, if you didn't know. So they're kind of rocking on chip manufacturing and fab. It's funny. They were going to break out here. The government of Netherlands announced that they're going to put export restrictions on the machinery that ASML makes. Retraced, hung out a little bit, and then exploded higher. That's why I say news, be careful of news. The chart pattern almost never lies. Chart pattern almost never lies. There's occasionally a few things that create problems, like low price stuff under $10, leverage stuff, things that the FDA gets involved in. So it's biotech, medtech, anything medical, and then China stuff, because China plays by different rules and they don't necessarily believe in truth such as we understand it here in the United States. CERO. That just looks like garbage. Absolute garbage. Supermicro. There's another one. These guys don't do anything different than Dell. Be careful. That's what I gotta say there. Be careful. For whatever reason, it's basically a meme stock right now. It's like the new GME. Be careful. Sure, they make money, unlike GME, but I would be very careful. BURL, it can keep going higher. It can keep being irrational. There's no reason why that one. Well, let's look at this a second. I've gone through this before. If you look at their financials, their price to earnings ratio, 85. Their price to sales ratio, 6.8. That is stupid. All right. The standard price to sales ratio is about 0.5 for computer sales. 0.5 price to sales. Why on earth would they be 6.85? Their margins aren't even good. They have a huge cost. And they even have a fair chunk of debt. I'd be very careful, very cautious on chasing the narrative of SMCI, even higher from here. It's basically stupid levels is what I would say. Ludicrous, plaid levels. I don't know. I mean, look at Dell. Even though Dell popped, we look at Dell, it's not getting the continuation. Look at Dell financials. And their price to sales isn't even listed. At 26 price to earnings. Their numbers look pretty horrible too. Now, if I keep clicking the wrong button. If you don't think that Dell does more business with NVIDIA, I don't know if I probably closed that. That's probably pretty smart. JT. See if I can even find it. Oh, I did it. I did close it. Let me see if I can find. Let me roll back a couple days in my history here. Yeah, here we go. Right here. Look. Dell is a bigger customer of NVIDIA than Supermicro. Just by 1%, but 1% is a lot of money. So be careful what you're chasing. And HP does the same thing. Other system builders do the same thing that Supermicro does. So be careful out there chasing those higher. Burl. That's interesting. Clothing is an interesting thing right now. It seems to be either a story of haves or have-nots. And that one did not go on down like I thought it might. Actually had a 3-wave retrace to a higher low, marginally higher low. And it looks like we may be set up to go higher. That was a super deep retrace. That high to that low. Looks like we're set to go to 274 on Burlington. Now, how long is that going to take? Well, possibly. I would not buy less than June, probably. If I was going to buy options, shares would be a fair way to play it. Right now, it looks like there's your initial target right up in there. 274 area. And be conservative. Maybe only go for 265. 317 above that. It may take a little bit to get there. Looking at this one other way. Oh yeah, confluence in that area. Yep, probably going up there. NVO has broken out to a new higher level. GLP-1 drugs have. Lilly was playing the game yesterday. Their stock not popping, but they're coming out saying that the GLP-1 drugs, the demand is outstripping the supply. We have to raise prices. More profits. Just ridiculous. You know, watch out. You know, that can definitely do some crazy stuff right there. Crazy stuff. What do I mean by crazy stuff? I mean, look, we're not even to NVIDIA crazy record high levels yet. We could go way on up here. 100 price to earnings, and maybe a 50 price to sales. Things could get wild. FNGU. When the NASDAQ breaks, this one's going to fall. This is leverage. Be careful on leverage. RTO. What the heck is that? What a gnarly chart. Whew. I wouldn't mess with that. There's resistance at the gap down right there. Coin. Rocking. Probably going to head up to this 270 area. LYT. Dumpster fire. Absolute dumpster fire. Right there. Reverse split. 1 for 60. Absolute freaking dumpster fire right there. Don't mess with stuff like that. Do it. Trade it. ARM. Churning in the zone. That's still a series of lower highs. Watch out. When it breaks, it's coming down. ML. Money line. It's just like Snoop line. Money line. Got the resistance up here at the prior highs. This is a lower high so far. Got a reverse split in here. That's all the makings. Oh, look. Go, Bitcoin, go. Breaking higher than yesterday. I'm going to put a alert right up here. Watch out for the run. Don't get caught off guard. That one's still, I mean, still rocking and rolling. MU. And it's got this resistance zone that it needs to work through. Once we get above that, we can go on extensions. But right now, we're just kind of working through these prior highs. About to break out, though. TSM. Same situation. About to break out. And these things could go on a pretty big run. Like TSM 168, MU. I don't even think I ran the, let's see if I ran. Yeah, I did. 112, 129. I mean, that's not huge for MU, but it is an extension nevertheless. TSM, still an extension. I mean, 20 bucks up. CC, ooh. My goodness. That looks pretty bad. That could be a measured bounce. Watch out. If that breaks above, that gets above this, this thing could actually go up pretty big. We're looking for a move from 25 to 60. If we get above here, arrow. Get above that, could be coming up here. SMH keeps being ridiculous. There's the target right up there around 235. ANET just keeps churning. 303, 317. Next upside targets. USD. Keeps being wild. 114, 130 on the upside. AGR. Ooh, man. What a gnarly pattern. Whew. I would wait. If this is going to set up something that you want to be involved in, it'll retrace. If it just does ridiculous stuff, you don't really want to be involved. And it's electric utility, though. I don't expect it to be a big mover. SOXX just keeps being crazy. Next level's up or even higher. Got 241, possibly 300 above that. DPST. That's stuck under the roadmap line. Watch for that to either break out above this over here or break down and go lower. We already kind of tagged the target area there. That could be the bottom for now. AEO. Like I said, clothing is an interesting set of charts here. Saying AEO. Popping up off the lows, and it's kind of got that nice start of a pattern there, extending out to the 272. This gets a retrace and go on another extension. It could be making a reversal here. DXCM. It's just chopping in the range. There's 136, 142 on that short-term target there. Probably needs another retrace after that. AMAT. The next target up to 20. GE. Talk about a company that came back from the ashes. Golly. Man. Rocking and rolling. Got the upside target 185, and it may get a steep reaction there. November Mike. Popping above the prior highs. Gonna go retest these prior highs. And then we got whatever above that. This has been a pretty rough chart for a long time, it looks like. Yeah. Yeah, IPO price way up there, and we're hanging out down here. That's rough. If we can break out of this crap down here, we may actually rally back up. That one could be turning around finally. Marine shipping, huh? AMD keeps being crazy. Just scraping the bottom of my target, 230. Next target up, right there. Target's on above that, up around 300, 340. We'll see what happens on AMD. But it's definitely being, it's another one that's overextending itself. I saw an interesting, I don't think it was an article, but it was kind of like a, I don't know, maybe it's, I don't know what you call them. Somebody was speculating that what if NVIDIA bought Intel? What would that do to the market in semiconductors? Just to grab their net operating loss. We got Intel. I don't think the Department of what do you call it? I don't think the government would let that happen. Anti-competitive, whatever. You've got 192 billion in market cap right here, and then we go look at NVIDIA. 2.26 trillion. Like 192 billion is like just a decimal point. It's almost ridiculous when you look at that. And then it's like you look at AMD. AMD is even bigger than Intel at this point. It's just kind of wild when you think about it that way. I think it's wild. Anyway, so these numbers are just getting to be crazy type of numbers. What if they did buy them? That'd be a interesting situation, wouldn't it? KR, look at that, nice pop. Are we finally getting out of the funk? If we can break above that 618 level, sets us up. Kroger could come up to 68, not a bad from 54. I mean, that's what, 20% on shares, maybe 75. OSPN, it'd be like a 50% gain. OSPN, resistance at that gap down right there. Be careful on that one. TECL. Well, let's just clear all this stuff off. Let's see what we got. 3x bulls. That's leverage. Be careful on leverage. As always. If we break out 110 on the upside, RSI. Man, I just wouldn't want to be involved in this. It's under $10, and what goes up sometimes comes down. Same pattern, right? Same crazy pattern. I've talked about it for a few days. Look, if you don't know what I'm talking about, this pattern right here. And we just grab something and cover it up for a minute. Look right there. Look how many charts have been doing that. Right? Lots of charts that I've been going through are doing that. What happens after that? More than likely that. I don't necessarily agree that we come all the way down to a lower low. We usually find a 618 or 786 level of support in here, somewhere up in this zone where we consolidated before, and then we go again. Or we can possibly go again, unless it's just a complete garbage company. But when we do this euphoria, I'm a genius, everybody's a genius, we're all getting rich, you know, it's a very dangerous time. How long it lasts, in a rationally long period of time, and then watch out. Please watch out. We see that over and over and over, and this one, not really different. Potentially coming back from the ashes after making a lower low, but I don't know. Rio, that looks like complete choppy hot mess. And probably going to push down into these levels right here, back into this box. Decliners, SWIN, popped, and back down here. That's just a ridiculous chart. Yeah, I wouldn't mess with that. I wouldn't mess with that with your money. I wouldn't mess with it with my money. For gosh sakes, man, be careful out there. That can come right back down to the bottom. VSCO, Victoria's Secret. Apparently, need to hire more of those plus size models. Make more of them feel better about, you know, the underwear. I don't know. Not doing too good. Retail haves and have-nots. That's a have-not. TM. Retail haves. Going up to 264. Different kind of retail, not clothing. CEIN. Coming back. Looks like it's going to take a trip back to the roadmap line. ARES. Needs a trip back to the roadmap line. That's kind of making that ridiculous exponential thing. CDMO. Bounced off the roadmap line. May go lower. How much lower? How low can she go? We're talking at $3. That's a biotech. Be careful. KSPI. Not enough to do anything. Tesla on the list. There's a dropper. Watch for a move down. 158. Now it could find a low in here. It could be 167. Could be the low. I just have this feeling. And it's not like high conviction like I was with 180. That we may see a drop down to this 158 area, 160 area, but we may top out before that, or bottom out before that. That could be the bottom. I don't know. We'll see what actually pans out there. Sometimes I get overly optimistic on the downside. That's why I don't typically trade to the downside. The market can just turn and burn because, you know, historically it likes to go up. I mean, it's kind of the way the market works. This one, another one of those nasty, crazy things, and it's Biotech Pharma. There you go. That's the list for the day, the things that we're moving in the pre-market and bias for the day. Now, let me know if anything I said was beneficial, helpful, informative, anything like that, any of the conversations. I love the feedback. I'm trying to come up with more stuff to talk about every day. Lately, it's gotten a little difficult. If you didn't notice, the market's kind of boring, even though we're just grinding, right? You know, grinding. Looks like we may pop that higher high, 51.74 on the SPX. Possibly. Kind of set it up. Made the, you know, statistically 70% likely based on the small time frame here that we're actually going to break on out. Gotten up, pushing up. 51.83 on the futures right there. 70% likely at this point. So there you go. Yeah, Apple, AMD, you know, they could all. Yeah. We'll see what happens. Any of them could buy it. I'm not disagreeing with it at all. I don't think Apple wants to buy Intel, though. They got their own chip fab going. So there we go. That's the update for the day. I'll be in Discord the rest of the day. So be careful out there. The account you save may be your own. Remember, it's not being wrong that costs you money. It's staying wrong. Don't stay wrong. And when when you're in the face of information that proves you wrong, don't stay wrong. Just close the position. Look to reopen when things are doing what you expect.